Yeah, so what's up, guys? Welcome. This is Flow series, episode 1. So Flow is an acronym of follow liquidity, observe willingness. All right. So following liquidity, it means that you have to know where to draw on liquidity for prices. Follow that liquidity to create something like a narrative. So, when price show you willingness or an intention to draw to a level, it's not as if you're just, in a sense, making an assumption that price want to draw to this. You are trying to follow that liquidity without intent or without willingness coming from price. You get what I'm saying? For example, price want to draw to this buy side liquidity. All right. So there has to be willingness that, okay, price want to draw to this. It's not as if it was that intent that show you that price want to draw to this. You get what I'm saying? You already have an idea of price wanting to draw to a level as liquidity. You've already seen that draw liquidity before price showing you an intent. If you are just following anyhow intent, you are going to be manipulated a lot. And you're not going to be that well integrated trader. You get what I'm saying? You have to follow the liquidity. You have to know the liquidity beforehand, before it actually shows its end, that it wants to really draw to that liquidity that you frame. You get what I'm saying now? So that is the idea. So we have a lot of things around that. All right. We have a lot of things around that. So number one thing that you have to focus on is higher time frame draw on liquidity, not just anyhow draw on liquidity. If you are going to follow liquidity, follow higher time frame draw on liquidity, because every lower time frame fluctuations, right? They are all working in the favor to eventually draw to higher time frame draw or objective or liquidity. You get what I'm saying now? So all your work should, you know, should be as a result of you wanting price to draw to higher time frame draw or higher time frame liquidity. You get what I'm saying now? So I hope that makes sense. So without wasting time, let's go to the real deal. So we are going to be dealing with higher time frame. The first thing, higher time frame draw on liquidity, and two, AMD, accumulation, manipulation, distribution, and three, opening price or openings, right? So these are the three contents inside flow. Follow liquidity, observe willingness. All right. So first of all, we are going to talk about draw on liquidity. This model is very simple. Very, very, very simple. Very, very simple, right? Very, very simple, and it has a very high win rate. All you have to do is just backtest, study very well, and know what you are looking for in price whenever you present yourself in front of the charts. All right. So basically, this is Euro card. You can trade any pairs that you like. All right. So basically, now when price was let's come to this low. When price was this, this is not a beginner study. It's not something that a beginner can actually comprehend that very fast. You get what I'm saying? You have to have some basic knowledge of what price action is and institutional trading you get. So when price was going higher, price took out this low basically and then keeps rallying. Price retraces back, right, to this down close candle, and then rallied again, retrace back to this down close, rallied again, trace back, and then rallied, fails to make any high to this high, and then drop aggressively. So there's something actually going on with this whole price action that you have to pay attention to, right? So each time price rallied, it retraced to balance the whole imbalance of one-sided price delivery. Buy side imbalance, sell side inefficiency. When price buys to the upside like this, there's imbalances on the buy side, and we have inefficient price action, inefficient orders that resides on the sell side, right? So which means this balance, this buy side imbalance, it is quite inefficient for sellers because they are not a participant of this one-sided move. So it has to be balanced. All right. So imbalance, rebalance runs on liquidity. You get what I'm saying now? So we have imbalance, which is just to the one-sided participant, which is just to the buy side. You get what I'm saying now? So price runs higher, just like this, and then retrace deep to balance the imbalance on the buy side. All right. So that now makes what sell side to be efficient enough. And then price runs again, creates another imbalance on the buy side, and sell side is inefficient. We're inefficient. All right. So price retraces deeper again to balance that range. All right. Another thing happened here. All right. Price retraces deep again to balance that range. You get, but in that process, what's actually going on? Right? Price is building another potential liquidity to be attacked, right? We have this low, we have this low, we have this low, we have this high and this high, relative high. So in the process of price building sell side liquidity, price is stocking sell side liquidity, and at the same time, when it's ready for price to attack sell side, it also stocks buy side liquidity, right? We have this low, this low, this low, right? And then eventually price attack this sell side. So the next area to attack is buy side. We have relative buy side here, right? It's not just about spotting buy side, spotting sell side, or spotting relative high or spotting relative low. What's the, like, how is the sell side being built? How is this buy side being built? What's the whole storyline behind how it's being built? You get what I'm saying now? So that actually, requires a lot of work as well. You have to know what you are doing to be able to, frame correct buy side and frame correct sell side. You get. So as we can see here, we attack this sell side liquidity. So the next area is buy side liquidity. All right. So this is this high right here. Now we now have a draw on liquidity. Right before this low was attacked, this lows was attacked, right? We are going to be viewing it as what? Potential what? Sell side liquidity. You are going to be anticipating price to draw to it. All right. It's something that you'll be anticipating price to draw to. So where is the willingness for price to draw to that? Now, we have this high. Price created this high, draw lower. Price was unable to break this high and then drop lower, right? Price dropping lower against this low. This is a very massive candle, right? And then this is the real upload candle in terms of real order block in there, right? But this one as well can act as a real order block because it has a lot of volume in it. So this was the last candle that broke this range, right? This from this range high, range low to this range high, right? So price trading against it, we now have a nice order block range to work with. So from this high to this, from this low to this high is an order block range. All right. So you can see that immediately price broke this, the opening of the price of this candle rallied to the upside at first, right? Doing what? What is it dealing? It's trying to retrace back to this massive candle that has a lot of volume in it, or retracing to the whole range of this order block. You get what I'm saying? And then price draw to this sell side liquidity. You get what I'm saying now? So basically, price breaking this low shows the willingness to draw to this sell side liquidity. You have this low and this low and this low as the real liquidity for price to draw to. You are following the liquidity. All right. You already have something to be looking at as target, as objective. So now, price has to show you willingness to draw to it, which is what happened here by price breaking this low. All right. So breaking this low, right? There's nothing price is actually, in a sense, reacting to as a real something to work with, right? Because price has already triggered this other block, went lower, right? This low has already served its purpose by triggering this other block to deliver to this buy side. All right. I hope you get that. This low has already served its purpose by triggering this down close candle to deliver to this buy side. All right, I hope you get that. So by price retracing to this low as well, it was this down close candle that price retraced to, right? So this last candle that dropped against this low was not entirely trying to draw to this low anymore, right? So because this is, you have a narrative to work with. You are working with a context, and the context is you have an higher time frame draw, which is this low, right? As what? As sell side liquidity. So price breaking this low, which is a very massive candle, right? Shows the intent to actually draw to this low, right? So for the fact that price was unable to actually buy from this low and attack this buy side, shows the real intent that price want to really draw to this buy side, to this sell side liquidity, right? Because in a very, very correct and accurate order block contest, another block has to have a fair value gap close to it to make it very, very high probable, right? But because we are having a very different contest here, the narrative that we are framing around price does not allow us to use this other block. All right. So you have to have a very, very strong narrative, very, very strong contest, strong narrative, and a very decent framework to be able to navigate yourself around, follow the whole direction of liquidity happening in the market. You get what I'm saying now? So the liquidity you are trying to follow here, you have to see a willingness for price to draw to the liquidity, which is what we are experiencing here. Price broke a short-term low here, retraced to the whole range from this low to this high, which makes it to be a complete block or a complete unmitigated structure, right? When price was going lower like this, and price made a low right here and eventually broke this high, right? Is an internal structure for this high to this low structure. So there's a fractal structure inside the whole big structure itself. You get what I'm saying now? So this is like one structure itself. We have buys going on. Price broke this low. Institutional are already in loss by taking out this low. So they have to mitigate that loss, which is why they trace back to this range of this low. So there's a lot of ways that you can actually frame price. Depends on how you actually understand price on a very, very deeper perspective. You get what I'm saying now? So basically, we are following this liquidity, which are this sell side liquidity. All right. And price has already shown us willingness. At first, by not triggering this, by not using this fair value gap, you can see this nice close below this gap. This nice close. You are not going to be anticipating this other block to trigger price and then expect bullish price, because what are we doing? We are anticipating price to do what? To, in a sense, draw to this sell side liquidity. Now, let's say your knowledge is very broad. You are not just working with this whole smaller price range, right? So looking at this low to this high range, when price was going higher, look at this last price action range or last structure, right? Price, in a sense, use this structure or use this price range to take out this high, right? Which means from this high to this low to that high, that range is very important for price. So that makes this candle to be like an up close candle, real up close candle. By the way, this is 3 months time frame. Each candle here, each candle here takes 3 months to form. All right. So measuring the range or the threshold of that candle, you can see the 50% or threshold of that last up close candle, which is like the real order block there, was rejected how many times? 1, 2, 3. That shows that there's something actually going on at that level, right? You might not be looking at that we have breakers, which is this two candles, right? You can see how many time price actually, in a sense, rejected that level. All right. So the first rejection was this, but you understand that price was just trying to, in a sense, rebalance this whole price imbalance. The first one also rebalance that price whole imbalance, right? And then thirdly, this. And if you are not looking at that, we have three drive higher in terms of price action here. If you, whenever price wants to sell, you have to see potential three drive higher from price. This is one, this is two, this is three, right? So that shows a selling momentum is already coming in. A selling volume is already coming in. Just that is tipping its hands off to you that price wants to sell. You get what I'm saying now? So the liquidity is this low, right? This is sell side, this sell side, right? And eventually price draw to that. But you have to see some sort of willingness for price to draw to it. You might not be seeing enough willingness here. You might not be seeing enough willingness here. You might not be seeing enough willingness for price giving you three drive higher here. All right. So it all depends on your, on how you've actually expanded your horizon when it comes to the study of price action itself, right? So follow liquidity, observe willingness. If you are trying to follow one side of the liquidity of price action, if price does not show you willingness, you are already safe because you are not going to be taking stupid risks. And that is the most important part of this series, this flow series, right? Because if you have a potential draw on liquidity or higher time frame draw on liquidity, and you are waiting for willingness to occur, if price does not give you willingness, right, you are saving that money. You are saving that. You are not taking stupid risks at that point because you are actually wrong in terms of draw on liquidity. You get what I'm saying? So that is quite mechanical. You can see this whole flow series, it is built on a mechanical system, right? Because you have to have something to work with before you initiate your actions, right? So follow liquidity, observe willingness. As far as you trust your system very well, once it shows you willingness, you act immediately, right? So which means immediately when willingness is being shown, right? You have what? You have this, three candles, which means you are going to be selling this guy for straight 9 months. 1, 2, 3. Each candles here is what? 3 months, right? So first 3 months, second 3 months, and this is the third 3 months, right? That's like 9 months. You are going to be selling this guy for 9 months, right? Because you already know the draw on liquidity, which is this low, and you can see how price actually potentially, eventually, and potentially draw to that, right? Price draw to this drawn, this sell side, eventually selling it for 9 months. You get what I'm saying now? So, this is very, very simple and it's quite mechanical in the sense that you know what you are looking for. It's not as if you don't know what you are looking for. You know what you are looking for. It's either there or it's not. You get what I'm saying now? It's either there or it's not. So this is episode 1 of Flow series. Follow liquidity, observe willingness. Follow liquidity, observe willingness. All right. So in the episode 2, I will be talking about AMD. All right. AMD and more in-depth about draw on liquidity, about higher time frame draw on liquidity. You get now. So where is price trying to draw to in this level now? So I explained this low acting as what? As draw on liquidity. Now let's now explain this high as draw on liquidity. Price has already shown us willingness to draw much higher. When price was going lower here, form relative high with this high and the high of this fair value gap, right? And then price retrace to this gap to form what? Institutional entry drill. And then eventually price did what? Draw to this. Which means when price retrace right to this low, where's our draw? This is our draw liquidity, right? So we're preparing to buy means that we are trying to follow this liquidity. Now, where's the willingness here? Price expands against this last down close candle. All right. Price has already what? Expands against this last down close candle. So the next candle that opened was trying to retrace into this down close candle. The series of candles that opened next expands against the draw on liquidity. So price expanding this last down close candle is a willingness to draw to this. I hope you get that. So this series is very, very simple. Very, very simple. You just have to follow it unless you have discipline issues, right? So observe liquidity. Sorry. Follow liquidity, observe willingness. Follow liquidity, observe willingness. Follow liquidity, observe willingness. It's very simple. Very, very simple. Very, very simple model. And mind you, this is not for beginner. We already know that it's not for beginner. It is most essentially for, you know, for some advanced trader, that's still looking for something to work with. You get what I'm saying now? So this is very simple, very, very simple, straightforward. You get what I'm saying now? And I explained the whole price action here that has actually happened here. We are working with all of that. And you might not be the kind of trader that likes to work with the whole range. If you like to work with probably 1, 2, 3 candles, there's a way you can work with this candle, this candle, this candle. There's a way you can work with just this single candle alone. And there's a way you can work with the whole range of this candle, right? Which means you are trying to follow the cycles of how price has been acting so far, right? You are trying to follow the rhythm of price action itself, the rhythm of order flow itself, the rhythm of institutional order flow itself. You get what I'm saying now? So that make a lot of sense. So I'm going to see you guys in the next episode, which is going to be about AMD and more in-depth teachings about drawn liquidity, more specifically higher time frame drawn liquidity. So I'm going to see you in the next one. Cheers, guys.